Alright, let's get on board with our guest for buy now, sell now this morning is Kunal Bothra as well as Ashish Kapur joining us this morning. Good morning, gentlemen. Thank you for standing by. Kunal, coming first to you, what do you make of the market move and what is your top technical pick this morning?
So good morning, Cheryl. I think the market mood continues to remain the way we left off on, I think, last week. A bit mixed. You had a bit of a wobbly start of the previous week where a couple of days you'd seen an intense sell-off and then Friday you saw a bit of short covering. But in the first half of the day, in the first hour of the day rather today, I think you've seen two completely different contrasting behaviors of the index. One is that you saw the index coming back to that 11,000 mark, but it was invited by a lot of selling into individual stocks as well as a couple of these spaces like the autos, metals, etc. And the other is the behavior of the PSU banking index, which I believe is showing signs of some sort of bottom out formation over here, and I believe that this recovery could sustain there into that pocket. So I believe that the market mood could remain to be a bit mixed going forward for the next couple of days. In that regards, I am mixing the strategies as well, one buy and one sell. The first one is about BEL, Bharat Electronics. I believe that stock has shown some extremely strong comeback in the last 2 days from 90 to 93. It's come back to almost 10% higher from those levels. But I believe with volume push coming back at the right time for the stock price, there should be scope for another 5 to 6 rupees higher from current levels. 109 is where I would place the targets on Bharat Electronics, recommending a buy with stop loss at 99. The second would be a sell on Hindustan Zinc, as I was discussing earlier that how many of these metal stocks have seen a big sell-off today, more of a continuation sell-off. Hindustan Zinc is no exception in that regards as well, and I believe the stock would continue to drag a bit lower from current levels. So sell with a target of 190 and stop loss at 202.
Alright, those are Kunal's picks for today. Buy on BEL and a sell on Hindustan Zinc. Ashish, coming to you, what are your wealth creation ideas?
Well, I think market is now beginning to form a bottoming out process, and what we have generally observed is that the markets, whenever they come back, I mean, it's ultimately the large caps which lead the rally and mid caps follow later on. So I think at the current stage, the best idea for any investor would be to look at large caps which are bellwether, which are doing well, which are not likely to go down much more, and which are likely to lead the rally up. So the two names which come to my mind immediately, one is Reliance Industries. Now, Reliance Industries, as you all know, doing very well. They have managed to do the geo expansion at a record time and at a record execution pace, and very successfully. So I think Reliance, to my mind, not only the business prospect good, I think is the only large cap, according to me, which has actually embraced disruption. So going ahead with the kind of geo launch which they have done, it is a company which kind of has changed with times for sure, and going ahead one can expect the company to keep doing well because they have become innovative and they have changed their business model. Focus has shifted from oil to data and telecom, so that's a very major change, and that has been done very well. So according to me, we will continue to live in times which are disruptive and innovative, and I think Reliance Industry is the best example of a company which has managed to change according to time. So Reliance, according to me, is a must for every portfolio, and I think the current downturn in the market presents a golden opportunity to buy this stock. The second is ITC. Now ITC, the current fall has brought it down to very attractive valuations. What most of the market participants are looking at ITC, and they are not getting enthused by the results, but what actually is happening is the cigarette business is still doing very well, and they're getting the benefit of a tax regime which is not so hostile towards cigarettes now. So the volume and the margin expansion in cigarettes is being used very well to get further entrenched into other businesses of FMCG, organized retail, paper, hotels, rural marketing, and stationery,
right,
and various other things. So altogether, if you do a sum of parts valuation, yes, now ITC is would come to around 340, which is a very significant upside from here. So these are the two large cap ideas which I think every investor can buy in this market.
Alright, those are Ashish's top wealth creation ideas, Reliance Industries as well as ITC. But let's get on board with our viewer queries. We have a first caller for the day. Jay Krishnan from Kerala is joining us on the phone line. Good morning, Mr. Krishnan. What's your query?
Yeah, I have got 200 shares of NCC at an average rate of 100.
Okay. And
I just want to know I just want to know whether I should sell it or hold it.
All
Okay,
right.
if sell, please suggest me some twist.
All right. Kunal, coming first to you, our viewer has bought about 200 shares of NCC at 100 rupees per share. If you look at the share price currently is half from the buying price. What would you advise an investor to do with the stock currently?
So yeah, Cheryl, I think the last 10 weeks, the stock has halved from 100 to almost 50, 52, which it tested on Friday. And it's been a very, very sharp reaction for the stock price. We've not seen such kind of, sell-offs happening into stocks where it goes into week after week into a pattern of lower highs and lower lows. So this seems to be more of an extreme and exaggerated selling. But also, I think it defines that the longer term trend is not positive now for NCC. What it was maybe a couple of months back when the stock was at about those 100 levels. So the stock long term trend have changed, but it's just that with this intense selling in the last 10 weeks, it's brought many of these indicators into an extremely oversold kind of territory. So my advice would be very simple, that look to average over here for NCC, bring down your cost price to 70, 75 levels, looking at the quantity, match for your average prices. And then if the stock bounces back to say levels of 65 plus, then I believe that you could stand a better chance to try and take a call where you've pared out your losses significantly on NCC, and then probably try and take a call that whether you would want to hold on to it from a longer term perspective or not. But I think at current levels, I would advise you to average, looking at the sheer intensity of the last 10 weeks of selling pressure.
All right, that's the take coming in from Kunal for NCC. Ashish, what's your view for NCC?
Well, I think despite the big fall in the share price, and that is obviously on back of very poor last quarter results which NCC delivered, and there is no denying the fact that there is pain in the system and pain in the construction business, which is very evident from not only the NCC results but also results of various other companies in the same sector. But having said that, after the fall, I understand that the investor is getting nervous because the loss is immense. But I really think that the investor should not only hold on but try and average out, and in fact at this rate can buy some more if he has money available for the long run, because within this space NCC certainly is one of the better managed companies, has a very visible order book, has over the years managed to remain relatively less leveraged than many other players. So the debt is also comfortable. Execution capacity is very well known and very well very visible over the years, and I think the kind of order book which they have, is a matter of time when the sentiment turns around and the stock starts performing again. So I would suggest the investor not to panic. Yes, the fall is immense, but that is in line with the mid cap fall which has happened in the market. So I use this downturn to try and average out and stay put in the stock.
That's the take coming in from Ashish for NCC. Believes that would advise Mr. Krishna not to panic because the fall in the stock price is in line with what the mid caps have seen, and would advise you to stay put in the stock for now. Let's move on. Then let's get on board our next viewer query. Then it's Lakshmi Ji who's joining us from Bengaluru. Good morning. What's your query?
Good morning. I have bought HPCL 105 shares at rupees 329. So I'm just worried if I can hold on to it or sell it, because it has fallen quite rapidly. So can you advise me?
All right, Miss Lakshmi, we'll take that query across to Kunal. Kunal, HPCL, a stock that is dependent on crude prices as well, has seen, if you see the stock price from the buying levels, has definitely seen a dip. What would you advise an investor to do?
Well, the stock did pretty well in its 4 years from 2013 mid, when it was I think 40-45 rupees to almost 500 rupees in 2017 mid. So in a matter of 4 years, the stock gave returns of almost 10x. Now post that, there has been a big reversal of trend for the stock price. Now when you see a 10x kind of a return for a stock price in a short span of time, the stock goes into a multi-year downtrend. I think that's what historically we've seen for lot of the stocks, not just Indian stocks as well, but across the globe, across various asset classes as well, that such kind of a sharp reaction generally gets countered by downtrend which lasts for not just 1 or 2 years, but something which lasts for 4 or 5 years. That's what I would anticipate could happen for many of these OMC stocks. And just based on that, I believe that it could be a prudent strategy to try and exit the stock, use these short-term rallies which you get into the stock price, whether it's 5%, 7% odd rallies from the current levels as well, to try and pair out your quantities and look to exit on rallies is what I would recommend for HPCL.
Alright, that's the take coming in from Kunal for HPCL, saying that you should look at exiting the stock on rallies. Ashish, what's your take on HPCL? Fundamentally, you think it makes sense to stay put in the stock?
Well, not really, but I think the investor already is losing a lot of money. Fundamentally, yes, I kind of agree with Kunal that it is a stock best sold, but since the investor is already losing a lot of money, and I think the sentiment also is pretty low, so perhaps stay put for a while. But on an upside, I think whenever the market start trending again, this being a large cap would go up. But whenever the investor gets whenever the investor gets her cost of acquisition back, or something close to her cost of acquisition, she would be best advised to sell this, because over a period of time we have seen in general the public sector companies, and in particular the public sector oil marketing companies, have very rarely delivered shareholder value because constantly their margins are tinkered with. They do not have very good corporate governance because of various social and political factors. So really speaking, best to avoid these stocks. And I think now that the investors already bought in, at this stage best to stay invested. But whenever she sees an upside, and which will come because it's a large cap stock, so whenever she sees an upside and it comes close to her buying rate, it's best to exit this and move your money somewhere else.
Alright, that's the take coming in from Ashish for HPCL, saying that you should look at staying put in the stock for now at least, but with the moment you see an upside in the stock, you should go ahead and sell the stock. That's the view coming in from both of our experts. Let's move on. Let's get on board our next viewer query, and that is Gharva M from Hyderabad. Good morning. What's your query?
Ma'am, this is Raghavendra. I'm calling from Hyderabad.
Oh, I'm very sorry, Raghavendra. What's your query?
Ma'am, my inquiry is I have 1 lakh shares Reliance Communications shares with my holdings.
Okay.
Since I'm holding it 1.5 years, so right now my average price is 4 rupees.
Okay. So you want to know what should you do with
exactly, ma'am. Yes.
All right. Kunal, coming to you. Mr. Raghavendra has 1 lakh shares of Reliance Communications that he's bought an average price of 4 rupees per share. What would your advice be on this one particular counter, where I don't think most of them actually gone ahead and dwelled or even thought of buying a stock, considering the kind of news, the bad news that's coming in for that group company?
There are two things. One is that the investor has to think, and sort of introspect on why did he buy on such a stock, just because the stock was available cheap, or compared to the historical price trend. So I think that's one introspection which you have to do. That what was the point of buying the stock just because at 4 odd levels it was very cheap, and with such a huge quantity which you have. So that's one aspect to it. But in terms of recommending the stock, I believe that the price trends are absolutely clear. That the way the stock has behaved, from 800 levels, just around, I think, a decade odd back, it's now come back to just less than 1 rupee odd, or approximately there. So it tells you that the stock has gone through a big correction, big carnage, and that's that probably could last for some more time. So I think rather than anticipating any sort of huge reversal into the stock price, I would expect that, or rather I would advise that the investor should try and exit the stock at current levels and look out for better investments. If you want to stick to the same pocket of telecom space, then I believe shifting to a Reliance Industries in Jio aspect, as well as or a Bharti Airtel, could be a better prospect.
All right, Mr. Raghavendra, that's the call coming in from Mr. Kunal, saying that you should look at exiting Reliance Communication on rallies, or if you want to be in the telecom space, invested in the telecom space, You can look at Reliance Industries or rather Bharti Airtel. Ashish, coming to you, what's your take on Reliance Communications and your rationale for the sell call?
Well, I think simple. I don't know who advised the investor, because this clearly is a very big loser and it's been losing on all counts for the last many years. So clearly, I think even if you want to do bottom fishing, there are many better ideas in this market today. And our Reliance Com, I do not see any chance of any kind of a revival happening the way telecom space is being played out. So clearly, it's a no-brainer here that one should be staying away from these stocks, and having invested, I think it will still make sense to take out whatever money you can from here and move your money somewhere else.
All right, that's the consensus view, Mr. Raghavendra, coming from both of our experts, saying that you should look to sell Reliance Communications, and please look at it that you make sound advice while investing in such stocks.